In this presentation, we will take a look at multiple choice questions related to CVP analysis, cost, volume, profit analysis, going through the questions and then practicing test taking skills with them. First question, total contribution margin in dollars divided by pre-tax income is A, degree of operating leverage, B, contribution margin ratio, C, margin of safety, D, CVP ratio, E, break-even point in units. Let's go through this again and use the process of elimination. Total contribution margin in dollars divided by the pre-tax income is the. So again, let's read that one more time. Total contribution margin in dollars divided by pre-tax income. A says degree of operating leverage. Now that might not be the most familiar term to us, but we should have an idea of it. It sounds kind of familiar, I'll keep it for now. B says contribution margin ratio. Now the contribution margin ratio, we should have a fairly good idea of the contribution margin ratio. It's because the contribution margin itself deals with the sales minus the variable costs. The ratio then has to do with sales and variable costs. So this is the total contribution margin in dollars divided by the pre-tax income. So this pre-tax income doesn't really fit in any of our kind of variables here, which we would think contribution margin ratio would have something to do with sales, and it would have something to do with variable costs and possibly the contribution margin. So I don't think it's going to be that. That's kind of a normal type of thing. C says margin of safety, and we've considered the margin of safety in the past, and it doesn't sound like a ratio type of term. It sounds like kind of a sales dollar type of term, so it doesn't really sound like a ratio. So I don't think it's C. And then D says CVP ratio, which sounds kind of reasonable. Maybe it would be CVP. That's what we're doing, a cost volume profit analysis. And then E says break-even point in units. Again, that doesn't sound like a ratio. It sounds like units would be what we're looking for, like a ratio of some kind. So let's do this again, go through this. It looks like A or D, total contribution margin in dollars divided by pre-tax income. And notice the reason I'm saying it's a ratio, it's a division problem, right? So that's going to be like a ratio. We would think it would be some type of ratio, percentage, or a decimal type answer or something like that. A says the degree of operating leverage. Again, we might not know exactly what that is. And D says CVP ratio. Now, between those two, we've probably heard of A, and D might sound reasonable because it has CVP in it, but we don't really have a CVP ratio. The CVP is the whole thing that we're doing. Cost, volume, profit analysis is like everything that we're doing. It has a lot of ratios that would be included under the umbrella of CVP, cost, volume, profit. So it's not really D. It's actually going to be this degree of operating leverage. Tricky kind of terms here to get this. Notice we can pretty much get there with the process of elimination as we did, even if we don't really understand this term. We know that it's going to be some type of ratio because it's a division problem. We're using the contribution margin, and then we've got this pre-tax income. Again, be careful there because it can be tricky. And that they're using income in this context, and it might more properly be called net income before taxes. This isn't income like the revenue line. This isn't income like sales. Most of the time, a book problem will use, when you're considering these type of items with a manufacturing company, not a service company, the top level number, sales or revenue, will be indicated with sales. They'll use sales. And then the bottom level, if you hear income, they might be talking about net income. So just be careful that income doesn't mean the top line of the income statement necessarily the way many books use it. It'll often be considering the net income, and that's a giveaway here because it says pre-tax. That means it's probably the calculation of net income. That's like the bottom line number before we calculate the tax on it. Okay, next question. A graph displaying cost and unit data for each period as points on the diagram A, least squares diagram, B, stepwise diagram, C, scatter diagram, D, break-even diagram, E, curvilinear diagram. Let's go through this again. Process of elimination. A graph displaying costs and unit data for each period as points on the diagram. A, least square diagram. Now we may have heard that term, so I'll keep that for now. B is a stepwise diagram. Again, that sounds familiar. I'll keep that for now. C says a scatter diagram. That sounds kind of familiar. B says a break-even diagram. Now, break-even is a break-even point usually. A diagram, probably haven't heard as much of a break-even diagram. I don't think it's that. And E says a curvilinear diagram. And again, that's probably one where we've heard it, so I'll keep that one. Let's go through this again. A graph displaying costs and unit data for each period as points on the diagram. So the least square diagram, stepwise diagram, scatter diagram, or curvilinear diagram. All of these sound like they're kind of a line of some kind, whether it be curvilinear, whether it be a stepwise type of curve, and we may not have an idea of the least square, but if we had no idea of these items, they sound kind of familiar possibly. The one that sounds like a bunch of points that aren't a line per se seems like a scatter diagram. So the scatter diagram is going to be a bunch of points. We're going to plot everything, and we're going to just track all the points that are there. It's not going to be a straight line. It's not going to be curvilinear. It's not going to have a pattern other than trending possibly upward. So the one here, just given the description, we would think would be C, the scatter diagram. Final answer, a graph displaying costs and unit data for each period as points on the diagram. C, scatter diagram.